Very good evening, members.
Good evening.
I welcome to all for this today's live webinar on Bank Branch Audit. We have with us a speaker from Kanpur, Anil Saxena sir, and our SIRC member CA Panara sir. So today's session is supposed to had on 21 March 2020 at Bangalore. Due to Corona, it is got postponed, and now it is an apparently same speaker is going to speak. So before starting session, just I want to speak about one vachana about Dhyana Dasoha. ದಾಸೋಹ ಎಂಬ ಸೊಯಗಂಡು ಹೋಗಿ ಗುರುವ ಕಂಡೆ ಲಿಂಗವ ಕಂಡೆ ಜಂಗಮವ ಕಂಡೆ ಪ್ರಸಾದವ ಕಂಡೆ ಇಂತಿ ಚತುರ್ವಿಧ ಸಂಪರ್ಣಾದಿ ಕಾಣ ಕೂಡಲ ಸಂಗಮ ದೇವ. ಇವತ್ತಿನ ಜ್ಞಾನ ದಾಸೋಹ ಇದು 12ನೇ ಸಂಚಿಕೆ. ಇವತ್ತಿನ ಜ್ಞಾನ ದಾಸೋಹಗಳು ಕಾನ್ಪುರ್ನಿಂದ ಅನಿಲ್ ಸಕ್ಸೇನಾ ಅವರಿದ್ದಾರೆ. ಡಿಯರ್ ಮೆಂಬರ್ಸ್ and speaker and respected regional council members, I wholeheartedly welcome all you for this today's session. Overview, planning and documentation, special checks for capital adequacy, balance sheet and general account. It is going to be handled by CA Anil Saxena from Kanpur. He is a science graduate from Kanpur University and qualified in the year 1984. Founder partner in the Agarwal and Saxena, and he authored a book, Bank Audit, a practical guide for bank audits, published by Taxman Publications. And he has a wide experience in the central sector of public sector bank, private sector, cooperative, regional, rural banks, and is also keen cricketer. And if you see his profile, it is a long list. So with brief introduction, I am presenting before you CA Anil K. Saxena. Welcome, sir. Anil, sir.
Thank you.
And we have an opportunity to have our regional council member Panara sir. So I request him to say a few words before begin the session. Over to Panara sir.
Yes, good afternoon, Chairman. Congratulations for being so active for the information of the speaker. Sir, once again I welcome you with a note that Bangalore is the first branch to introduce the relaying of these programs on YouTube. You can watch anytime, and these programs will be recorded and uploaded to YouTube. And many of the regional councils also followed the method of Bangalore. That is the high-tech city's contribution to the institute also, for which I congratulate every member who started this initiative. And this is being followed everywhere. And this coronavirus has made us meet across the geographies and also across the regions of the institute also through these webinars, which have come in very handy with us. And more importantly, in this, the risk of audit that is increasing every year, which the learned speaker will be taking us through. And even if there was a physical program, it was very difficult to have a speaker from Kanpur. So an author on the it's called bank audits, he has authored a book also, I heard. So very hearty welcome to you, sir, because you are from other region, but for webinar it would not have been easy to catch you up physically for this program. Thank you very much for accepting this invitation. And going one more word of caution to the members who are watching. So there should be no complacency in the mind that we know bank audit. Being in the 33rd year of practice, I have been listening to every program on bank audit to be more accurate. So it is not that everybody knows bank audit. One has to update because there is no end for learning, and more so in this year because it is to be online audit. Most part of the audit has to be online. We have to be doubly cautious. And being a senior chartered accountant, not as senior as the speaker, he is qualified in 84, I am qualified in 86, but still I am getting more tech savvy, plus trying to have one or two young CAs already with me to support me in this handling these technical issues. I hope you are handling all these issues along with the topic of how to audit online also. With these words of opening remarks. I thank the chairman for giving this opportunity, and I will close my opening remarks with one more statement. He has kept this as Dasoha, Gnana Dasoha. I want to add one thing. It was the proposition of the 12th century reformer, Sri Basaveshwar in Karnataka, who contributed to the global humanity. And in that, he says, Guru Linga Jangama, Kayaka and Dasoha. This Kayaka and Dasoha. Dasoha means connecting oneself by contributing to the society. This human service, every chartered accountant who is there in the managing committee of branch or regional council or central council, they have been doing, and more than them, the assets like Mr. Saxena ji, you are the real assets of the institute, and you have also been doing this Dasoha, the word, pure Kannada word, sir, connecting yourself to serve the society and sacrificing your personal time and resources. So with these words, I very heartily thank you all and wish you all a happy learning. Thank you, and I wish the speaker takes.
Thank you, Honorary sir, for your kind word and about the session and Bangalore branch activities. So once again, I thank you. Dear members, just we start for Dasoa, and so we are all are eager to waiting from Kanpur, which is in a distance, long distance, but now for it is in distance education, it's very closer to the whole world is closer. So over to Anil sir for your session.
Thank you, Chairman sir, and also the respected Regional Council member. Good afternoon, everyone. I think before at the outset, I think I need to thank the chairman for having invited me initially to Bangalore on 21st of March, which, as you know, could not have happened, and now on the webinar. Just 2 days back, in fact, I inquired from him the Jnana Dasoha, what did it mean? And he told me it meant knowledge sharing, which was, very wise of him to have this as the theme of the 3 webinars, which would happen starting from today. The respected regional council member, he also referred to Bangalore being the first for having started the YouTube. In fact, just for your information, I think I've been following Bangalore branch probably for 4 to 5 years. Guru Raj ji, Mr. PM Gupta ji, and so many other wonderful speakers you keep bringing on your YouTube channel. In fact, for me, it is the channel for referring on any topic. So congratulations to the Bangalore branch for, being number 1 in the high-tech part. Obviously, you are the high-tech capital and also the high-tech capital for chartered accountants. Sir, I think, like you rightly said, we'll be taking up the overview, planning, special checks, capital adequacy, because, special checks on capital adequacy, I felt always that, this is one area where generally people have been a little lax on, verifying the statements. And if time permits, I would like to take up, I think I spoke to the speaker from Bombay. I think he's not taking up agricultural advances and natural calamities. So and I feel that, these, the agenda at 5 and 6, they are very important part of the entire bank branch assignment. So, in case time permits, I would definitely take up the agriculture advances and natural calamities, which obviously have their own complexities. The entire, my agenda and my objective is obviously, I think members would realize that if I actually talk of glamour in a bank audit, branch audit, a webinar or a seminar, it will always be, the IRAC norms and probably the regulatory changes, which I've been told would be taken up during the next 2 days. So I'm left with, the planning part and the others. Now, planning for me has always been, for more than 4 decades, I've always felt that, this is one portion which probably should take up, and it does take up nearly 30 to 40% of the total time one gives to any assignment. So my objective would be, to help the members in planning for the assignment. Obviously, COVID has given us a lot of time to plan, and also number two, document what we execute. I mean, so the main concentration of my agenda would be to help all the members plan the agenda, and most importantly, document it. So this is the part of the agenda which I would take over the next 1.5 to 1 hour 45 minutes. Now, let's quickly see the background of what exactly has been happening during the past 1 year. Obviously, I think all of us are aware of the mergers of public sector banks, which leaves us with just 10 public sector banks now from 1st of April 2020. And then one very important risk and news which the banking sector has been facing are the frauds which have been uncovering. If you actually look at the chart I've tried to make, now this I do not have the figure as of 31st March 20, so the figure for 1920 only has the first 9 months. Now, if you look at the value of the frauds which have been uncovered, it's from 18,000 crores, it has gone up to 1,17,000 crores in just 5 years. In fact, maybe by the end of the year, this could go up by some number which, I cannot as of now foresee. But correspondingly, whereas the number has gone up by nearly 6 times, the amount of frauds, but if you look at the numbers have generally been smaller. So it is, the larger advances which have, been discovered as frauds. So this is one aspect which, we'll have to consider while doing any audit, any branch audit, and obviously, and also in lines with the corresponding essay. Now, just a background. Now, if you see the current December 2019, the NPAs have shown surprisingly a decrease in the gross NPAs. And obviously, after the 17th April 2020 circular and the 27th March 20 circular, the apprehensions one had that the gross NPAs would go up post the lockdown and COVID. That, of course, has gone up because we have a NPA holiday for a period of nearly 90 days. All the public sector banks, of course, this may not be the position in the year end of 31st March 20, but they reported a profit of 507 crores as against a huge loss of 81,000 crores last year. So, just these 9 months, but of course, I do not foresee the banks still being in red. And then during this year, the all important, after the Supreme Court struck down the circular of 12th February 2018, the RBI came out with this circular of 7th June 2019 for resolution of stressed assets. And of course, extending the MSME restructuring of 1st January 2019, we had a fresh circular, which obviously, just extended the time of 11th February 2020, which I think, the speakers over the next 2 days would take up. Then a very important RBI expectations from the branch auditors and the central auditors is with respect to not only fraud, but, a step behind that, which is the early warning signals. So, the RBI now expects us to identify the early warning signals, which it has already given in the circular of 2017, those 42 signals, and help RBI in uncovering frauds, or probably, in case there are some early warning signals, we report to the top management. And obviously, in any bank audit or audit of a public sector, you have this not fear exactly, but there's always the re-audit by the regulators, and in case an account does turn out to be bad or a fraud, then obviously there are other auditors who jump in, like the press, the government, public, and other regulatory bodies. So one has to keep this in mind while planning and documenting. Then the other important thing, which of course I think is still in discussion, and we are still awaiting clarification from the institute also, is a letter of RBI which has been written to the CEOs of all the public sector banks and other banks with respect to 5 additional reporting paras to be reported by the bank auditors. So obviously, and surprisingly, in fact, importantly, that though out of those 5 paras, 1 para relates to reporting on the IFC. So this, we are still awaiting. In fact, only 2 to 3 days back, I wrote to the institute seeking whether, there is any guidance coming in respect of the RBI letter to the CEOs with respect to addition of those 5 reporting paras, because then one will have to change the format of the audit report which branch auditors would have to issue. And secondly, in case the IFC is to be commented upon even at the branch level, then obviously one would have the issue of whether we go by the guidance note which was there earlier, and then how do we how do we take the risk control matrix, how do we check it? Even otherwise, this year is going to be a challenge of actually visiting the branches and verifying it. Like the chairman said that it is going to be a big issue of completing it, and whether we are able to do it online, that's another issue. Now, in his opening remark, the respected regional council member also talked of me taking up the online auditing, but with due respect, I think the topics I have taken up right now, and in case I need to touch upon the online audit, I think the entire process would take at least an hour, so that it does have value to the members listening in. So in case the Bangalore branch is interested in taking up a separate webinar on online audit, then probably one could plan for that. Then of course there are, like I referred earlier, the RBI circulars of 27 March 2020 and 17th April. And then very recently, only 2 days back, the RBI again sent a letter to the CEOs with respect to how the branches are to be chosen, how online data is to be shared with the branch auditors. Now, this obviously, the net result of although banks are still in the process of discussing it and trying to find out as to how many branches would it actually result in reducing, and how many auditors would it need. But then as of now, it appears that there would be the number of branches would obviously go down, because the earlier rule of allotting branches is now has been limited to, the RBI said that one can allot branches spread across all the semi-urban, urban, rural, and other representative branches, so as to cover 90% of the advances. And this time they've added a new parameter, which is also 90% of the non-fund based exposure of the bank. Now, this is a new parameter, so obviously, it would take some time before the banks are able to come upon the numbers, the number of branches, and the number of auditors. The challenge, of course, would be with respect to banks where the allotment has already been made, the acceptance has been given by the corresponding auditors. So this obviously, I think banks would have to take a call or probably, seek advice from the Reserve Bank or the RBI. And I think, this is a matter which is probably discussed most of the waking hours of the entire world's population as of date, the COVID-19 disruptions. Obviously, this disruption, the Institute is already come out with an advisory, which I'll just briefly touch upon. Now, how would this year's audit be different? Obviously, the first challenge would be, is it possible for branch auditors to complete an audit without actually physically visiting the branches? To my mind, I think it's going to be a very difficult task. In fact, if not impossible, more so because the documents are not available on the CBS software, which is which all the public sector banks are using. So, and I do not expect that, because of the privacy matters and other issues of the data being shared on emails of the individual auditors, I do not foresee that the banks would be able to share large data, which I think all branch auditors would need across the this thing. In fact, data relating to, let's say, they may send us data which they in Notepad, etc., on G Drive. But then, the other data which one requires, and the other documents which one requires with respect to the sanction letters and various other audit reports, the stock audit, the stock statements, various other things. I think, it would probably, what one could do is probably shorten the time one has to be there by choosing a branch at the same place where the auditor is, so that a certain amount of review can be done at a remote branch, but then expecting that the entire audit is done without the auditors visiting it could be a challenge of sorts, at least for public sector banks. Obviously, I think the SEBI extension, everybody is aware, and after the 27th April 2020 RBI letter, I foresee that the SEBI extension would also get further extended, because as of now the letter of 27th April says that the branch allocation by the banks has to be completed by the 15th of June 2020, which is nearly 45 days away. Till date, the SEBI had extended the filing of the financials by all listed entities by the 30th of June. So obviously, that would get extended logically, and that'll depend on how things phase out. So quickly, please do remember that the advisory of the ICA on the COVID-19 disruptions, it is an advisory, not a guidance note or a statement. And these are the accounting standards which the institute has actually referred to, which where the auditors are expected to review the impact of COVID-19. As a branch auditor, I do not see any of these accounting standards impacting us as branch auditors, except probably AS4. And then I think if you look at the accounting standards, all of them are head office level accounting standards impacting. But accounting standard 28 and 29, of course, most of the banks are disclosing it as a separate statement. So this, as branch auditors, one would have to see whether there is an impact which because of COVID, which one would have to consider in the AS29 statement. And if there is an impairment which needs to be considered, probably escalated to the management and the central statutory auditors. Now, there are some standards on auditing. Of course, the entire audit revolves around the standards on auditing, and I think a good audit would always, the regulatory bodies and the institute would always expect that the audit has been done, documented properly, and has been done as per the standards on auditing. So these are the essays which the institute has listed out, which the auditors need to consider because of the COVID-19 disruption. Obviously, I think SA 600 we would use, but then because of the COVID disruption, in case we visit the branch during May, it in many cases you would find that the concurrent audit report of maybe March definitely would not be available, and maybe even in February, in some branches you would find that they are not available. So one would have to take a call and probably expand the sample which the auditors take up during this at least for March 2020. So obviously, I think SA 580 I'll be taking up separately. Similarly, SA 505 and 240, obviously, in a branch audit or a bank audit happens to be one of the most important essays which all branch auditors need to consider. SA 701 key audit matters. The first year, I think there was a diverse opinion amongst many banks. Whether CAM has to be commented upon by the branch auditors. Some members still feel that the key audit matters need to be commented upon by the branch auditors. But this year, if you read the guidance note issued by the institute, guidance note on bank audit 2020, then you do not have the SA 701 para. So obviously, one would and the draft report to be issued by the branch auditors for public sector banks does not have the SA 701. So I would presume that we do not take this up now. Now we start off with the planning part. I'll as I take you, we walk through the branch audit. We also need to at each level, I would also point out that these are the documents one has to document as part of my audit file, which obviously would help you in case, God forbid, there are some inquiries at whatever level. Now, obviously, the first stage is the appointment letter is received. Then I have the disqualifications which I need to confirm. Now, generally, what I've observed, and based on the discussions and queries I've received from the other members, it's generally been found that as soon as I get the appointment letter, I immediately issue the declaration of indebtedness, independence, fidelity, etc., and disqualifications. Whether I'm indebted or not, that's fine. But then what I would advise to all of you is, as soon as you get the appointment letter from the bank, you can immediately, in case you are a proprietor, obviously that you are not indebted, you are independent, and you can give the declaration which the bank wants. But let's talk of a firm which probably has 4 to 5 partners and spread across different states. Now there, if I am accepting, and if I accept it without actually taking a confirmation from the other partners, I may be making a mistake. So the first document I would suggest is that whoever is carrying out the acceptance part, I think that particular audit partner needs to shoot off an email to all the other partners of the firm, seeking confirmation from them that they're not indebted, and any other confirmation which the firm is giving to the bank. So this would take care of any chance by which over the past 1 year some partner may have taken a loan from the bank, which probably you are doing, or probably you get a new bank during the current year, and you accept it without actually confirming from the other partners, which may be 2 in number or maybe larger in number. So that is one thing I would advise, that you shoot off a mail, and in case you get a confirmation, then obviously you'll have to think about giving an acceptance or not, or else that can be kept as a document for the entire branch audit. And then obviously another important is, once I have shot of a mail to the previous auditor and got an NOC, of course there is a clarification that I can give the acceptance immediately, subject to the NOC being received from the previous auditor. And in case the previous auditor does not give the NOC post that, and then I can write back to them that this is it. The most important point is that as soon as my NOC is received from the previous auditor, or it is still in this thing, I need to ensure that the engagement letter as per the SA 210 is definitely exchanged with the branch. Now, normally in a bank, the appointment would come to you from the general manager, which may be the head office in head office, or the local zonal office. Now, for us as branch auditors, it would be next to impossible to actually get get the engagement letter signed by the appointing authority. So the best alternative for this is that let's say I am doing 3 branches. What I do is, before I move out from my base camp, I get those engagement letters printed for all the 3 branches, and then get it signed by the branch incumbent, because finally it is the branch manager who is responsible for the preparation of the financial statements, etc. So this is another very important document which all of us need to ensure that we do exchange this engagement letter with the branch incumbent. Obviously, then today this webinar is also a planning portion, but then specific to the bank you do, I think it's very necessary that you do convene a meeting, not only of the resources, you and the other partners who would be executing the branches which have been allotted to you, but also the other audit resources, the articles, etc. And most importantly, post the entire meeting minutes, they need to be documented, and they should be signed and kept. And this is, I think, a very small add-on which all of us can do, that whenever we plan, we can ask one of the articles or one of the audit resources to minutize the meeting which is happening, and then take a printout and sign it and document it as part of my entire document assignment. And then obviously, the next thing I do is I send an inquiry letter to the branch. I think that inquiry letter is also there in the guidance note. I send them, and together with that, I would also suggest that before sending the inquiry letter, as soon as you get the branch, I think it's always better if you give a call to the branch incumbent, talk to him, find out what kind of advances he has, what kind of audits has been completed, whether or not any borrower was commented upon in the RBI divergence, or any other important thing which will probably prepare you for the branch before you actually reach the branch. And then the team constitution, typically this would have been my team constitution in normal times, not probably the before COVID times. But during COVID, it's going to be a challenge. So, I think what is important is that, how much of the job one can do before actually reaching the branch. So this, of course, I think the RBI has also suggested that data be shared as per the 27th April 2020 letter. But then, how the individual banks are going to come about, how are they going to, make the CBS softwares available to the branch auditors, how they're going to allot the branches to enable that, the traveling gets down. And that's an issue which probably will get resolved over the next week or 10 days. So, typically one would always expect that, for any audit, I think, the departments with the highest risk, I would categorize them into, should always be done by the senior most. And to my mind, any branch not having a partner or a senior chartered accountant going there would probably, reduce the level of, I would increase the risk. I would be, that would go along, primarily because, the balance sheet, the financial statements, etc., the tax audit, probably, you would have audit resources who would be able to do this. But, advances, I would always think that, it has to be done by, and the IRAC norms, the compliance with the regulatory circulars which come out, it should be done by a senior member, preferably a partner or a chartered accountant who's been doing bank audits since a long time. Then obviously at 11, I have the SA 580, the management representation letter, which, to my mind, I think, across webinars, people have asked me that, what if the branch manager does not sign the SA 580 letter? Then my reply has always been that, if he does not sign the SA 580 letter for you, because, they'll contain confirmations, affirmations with respect to a number of, verbal discussions which you would have had with the branch manager. So obviously, as a document, you would need it as for your audit file. So just like you need to sign off the branch by signing off the audit report, I think the branch officials need to sign off by signing the SA 580 letter. So for me, it's an important letter. Obviously, it will not replace the audit procedures you are required to do, but then definitely it is one important thing where you should the members should ensure that do not sign off without the SA 580 letter. And at 12, I have said that sign specified statements and certificates only. This is primarily because I felt that over a period of my experience of maybe more than 4 decades has been that when you actually go into the branch and when you're signing off, they come up with a number of certificates which they say that these are required to sign. You've not signed this. Now, my advice to all of you is that since you have signed an engagement letter, you have an appointment letter. The appointment letter clearly specifies that these are the 12 or the 8 or the 7 certificates you need to sign. Please restrict yourself to signing only those 7 certificates. Do not sign anything other than what you've been appointed for and for what you have exchanged the engagement letter. And obviously, the audit report, the draft audit report is there as of now in the guidance note 2020. But then, in case there is a revision, obviously, as members, you would get a copy of that. Then comes, I've just shared 1 or 2 slides on this because, this is the first step, I would advise all of you to take before, together with the inquiry letter after the acceptance, is to seek data. Now, data can be given to you by the branch in notepad file, which obviously, you can. I think all people who are conversant, they would be easily able to convert those notepad files into Excel files and then do an analysis. Now this, the 7 data which I've shared to you, which you can seek from the branches as of now in Notepad for your analysis. Now, this primarily how it will help you is that it will help you create lead sheets of individual line items. Like, let's say I'm talking of advances. Now, you would be able to, from the GLB, create a lead summary of, what are the advances under term loans, under CC, under packing credit, under bills, etc. Similarly, the non-fund based LCs, BGs, and also the other heads in the balance sheet, the other assets, the other liabilities, and individual line items of the profit loss account. Now, once you have these lead sheets, then when you actually lay hands on Finacle, tracking that becomes very easy. The review becomes easy, the documenting becomes easy. You will also, the audit resource who's actually doing a profit loss account, and if he's made lead sheets for individual line items, obviously he would be able to and not only compare it with the previous year, but also in case there is an abnormal difference, also document the reason as to why this has happened, and conclude on that. If the list of NP accounts is there, they're also, based on the type of parameters you get, you can do a lot of analysis on that. And I would not say that, you would be able to, because you do not get the transaction files. What you're getting in this is the year-end file. But, once you've done the analysis, created the lead sheets, before you actually reach the branch, you would get a fair picture of what exactly to look for, where exactly to lay more stress on, and what to probably ignore and document only. So the lead sheet objective, obviously, it gives me a macro view of the entire individual line items, and also broad heads of account. If I am an off-site partner and I have an on-site partner separately, he can mail it to me. It becomes easy for me to review. Obviously, it gives me sufficient appropriate evidence. Then, most importantly, lead sheet will document for me as to who did the particular procedure, how did he do it, because I will document how I did it, what did I use to do it, when did I do it, and which was the issue which was actually escalated to the management and discussed. Then obviously, it will also help me in standardizing the audit procedures for future years, and most importantly, recording the audit conclusion with respect to each line item. So typically, I would say that, one needs to prepare lead sheets for all the advances, all, number one, the summary of the major classification, and then post that, I have the borrower-wise lead sheet where, I can give it to the audit resource, ask him to review it from the Finacle, and then note down as to, what is the health of the particular account. Obviously, like we would find, we would discuss that, the other assets and other liabilities are always the most important part in any balance sheet. Or balance sheet items, income, expense, and all other line items. So typically, we would be able to cover all the heads in the financial statements. This is one check I think all of us can do. If you remember Satyam, and the importance which I think most of the reports, the regulatory reports which are coming out as of date, is with respect to external confirmation. In fact, today, post-COVID, I think even in the advisory the institute is given, they have said that this is one essay which the auditors would need to consider. For me, as a branch auditor, I think what we have been doing, and I would share with you for nearly probably 7 to 8 years, is we do carry out the SA 505 external confirmation process even in a branch. Now, all I do is as soon as I get contact of I get to know the name of the branch, I immediately talk to the branch head, even write to him, and then ask him to share with us the email IDs in respect of the sample of advances. Let's say 10 to 15 of them, the deposits, in case the bank is maintaining balance with RBI and other banks, the email IDs of that. And in respect of other assets, other liabilities, if there are certain heads where I need an external confirmation. Now, once I have this, since I already have the GLB, etc., I know the balances also as at the year end. So then all I do is I shoot off a common mail with obviously all the email IDs. So I just have to make one email for advances, for deposits, and the banks RBI, probably 5 to 6 mails with the email IDs of all the sample advances and deposits, and then send it to them seeking confirmation of the balances. Now, I will not say that, the past, my experience has been that, I've received confirmations from all the borrowers or the depositors. But, there have been every year, whenever we do say shoot out this mail, we do get confirmations, maybe 3 to 4 of them replying back saying that, the balance which we've written is confirmed. But till date, obviously, we have not received any instance where the balance which we've sent out has not matched with what the borrower or the depositor has said. Now, in the pre-audit meeting, what I would suggest to you is that, obviously, as in preparation, we do read the RBI regulations, the master circulars, the FAQs, the master directions, etc. But I think, to my mind, what is very important is to not only ourselves read the bank's closing instructions, but also ensure that, the entire team reads the bank's closing instructions thoroughly, because those are general. The regulatory circulars are general. The the bank's closing instructions are specific to the bank, and as you would have noticed that the closing instructions always give guidance on as to what under individual heads, what is to be checked with what, and how it is to be mapped with other heads, etc. So I think for me, serial number 3 would be very important. And obviously, in the pre-audit meeting, one needs to think out loud, ensure that all people know their responsibilities. What are the kind of risks one can discuss amongst ourselves, and based on the past audit experience or the experience of the current year, the senior or the partner, he can guide the audit teams to what the procedures which need to be adopted. Obviously, the risk of improper planning as of date is, in case I do not do a good job, I could obviously get into, time when the advance, or there could be a divergence in the RBI inspection which happens post our audit, because branch audit is one audit which bank branch audit is one audit which gets re-audited by the Reserve Bank of India under Section 35, and that is always done with earlier it used to be by visiting the branches, but now since data is available to them, they do it across with 100% population sample, and so it's not it would not be a case where divergence could happen only in cases where the balance outstanding is probably 1 crore or above, or 50 crores and above. It could happen in any amount, probably 10 lakhs or 20 lakhs. Last year, there were a number of instances with respect to mudra loans. So I think we need to be clear. And also with, at least next year, NOCLAR in the revised code of ethics coming out, we need to be careful in ensuring proper compliance with all the regulations which are there in the bank branch audit. I think most of them, this procedures we've already discussed. These are the some of which I've listed, where we need to ensure that the audit procedures we list out, they comply with all these literature and any other thing which you feel you probably you have your own procedures which comply with this thing. You have your own templates. Please do use them and share it with them, with the others, so that the others can benefit too. I think we've already discussed this, but in a bank branch audit, essays are important. We cannot say they may be very boring, but then if you actually talk to anyone, they would always say that the only thing which would protect any auditor is the standards in auditing. So, friends, I think all of us need to ensure that we comply with the standards on auditing. Most importantly, like I said in my opening remark, the SA 230, the documentation, fraud, when I'm talking of a bank audit, SA 520, obviously analytical procedures you would do. 320, I think materiality is already set by the banks normally, but then you can also set your own as materiality in case you want to set it at a lower level. And then external confirmation, like I talked of. 260 is obviously more in respect of for a central auditor who discusses it with the audit committee, etc. But then as a branch auditor, when I'm taking a SA 580 letter, and if there are matters which I need to discuss higher up, then I need to do it as per that. Sampling, I think above the cutoff limit, we should ensure that we reduce the risk at the minimum by choosing a larger sample. And using the work of another auditor, obviously, you will have a number of other audit reports like the concurrent audit reports, the forensic audit, the stock audit, and various other audit reports which you would have to refer to. And I think these are the various reporting standards which they are there. But then with the the draft audit report already available, I don't think we need to get. Now, the SA 230 compliance, I think these are two important documents which I feel could protect most members from at least the divergence in case it does happen in the RBI inspection with respect to the NPA IRAC norms compliance with respect to provisioning and the asset classification. So primarily, what I would suggest is that in case whenever you're through with the review of the asset classification and the provisioning norms across all the different advances classification, and at the end of the 3 to 4 days of your reviews, suppose you do come out with a list of, let's say, 10 to 15 accounts where you feel that these are the accounts where I need to discuss it with the bank management, but in my opinion all of them need to be classified or downgraded, or the provision increased, or the security decreased to increase the provision. Then once you are through with the discussion, probably you would land up with a figure that probably the branch manager accepts 10 of your accounts as NPAs, unlikely so, and 5 of them as he would give you some reason where you are also satisfied that okay, these accounts are sticky, but they do not need to be classified as NPA. Now, what do I do? So what you do is that the entire sample of 15 which you took for discussion, please take, this is my personal advice, either of course keep it in the soft also, but then take a copy of hard copy of that, and then whether in soft or in hard, document the reason why those accounts were classified. I mean, a detailed reason as to why those accounts were classified as NPA. Okay, so those 10 accounts, you would have the reason as together with supporting documents, probably the GST return and other documents which clearly show that there is these accounts needed to be classified as NPA. And the other, these are more important accounts. The other accounts where you have not classified the accounts as NPA based on some satisfactory evidence which the management, the branch management has given to you. So these 5 cases, you need to document the reason very clearly. Also, referring to the RBI master circular or the regulatory circular, based on which you are not you have not classified that account as NPA. So so that, because let's say the RBI divergence letter, if it does happen to come, it comes to you after maybe 1 or 2 years, and then obviously memory cannot be strong that I remember what happened 2 years back. So what do I do? So obviously, for me to having documented it today, I'll be able to easily reply after 1.5 or 2 years when that letter, if it does come, from inquiring as to why I did not classify an account as NPA. So these are 2 important things. So please take a printout of all those accounts where you have classified those accounts as NPA and not classified them. Similarly, where you are increasing the provision because of depletion in the value of security, etc., do not just note down that this is this thing. I think I would advise you, and if possible, take soft copies or hard copies of all those papers, documents, which would help you in explaining both the classification as NPA, the increase in provision, and the non-classification of such accounts as NPA. Friends, I think I'll take you through a pre-sign-off checklist which I have compiled, which I feel that see, as a signing partner, obviously I want to ensure that all the risks, etc., have been covered by the resources who I probably trained during my planning meeting, and also ensure that some important risks I probably cover myself before signing off. It would have been done by the person concerned, but then this is only to cover that risk of having forgotten to probably check a few things which the regulation requires us to do. Just for 5 to 6 special checks. This is obviously apart from the audit program you would have covered yourself. Now, the first thing is, like I said, is regarding the early warning signals. And based on the early warning signals, there is a provision in the RBI regulation that with respect to all exposures of 50 crores or more, there is the branch needs to red flag accounts which are showing signs of stress, based on obviously the RBI circular listing out those in Annexure 2, listing out the early warning signals. So the first thing I as an auditor would ask the branch management is to tell me whether there are any accounts which have been red flagged. Now, the provision in the regulatory provision is that if in case there are 3 to 4 accounts, and like in the first bullet, for accounts below 5 crores, it is at the bank's discretion. Now, sorry, I think it should be 50 crores. Now, this red flag, if it has been the 3 to 4 accounts have been red flagged, and if they continue to be red flagged and not removed even beyond 6 months, then the regulation says that it has to be reported as a fraud or removed from the red flag. So, and obviously, if I classify it as a fraud, I need to provide for it. So this is an important thing, that you take a list, ensure that the red flag is does not continue beyond 6 months, and if it does continue, then you need to ask him as to why it has not been removed. And if it has not been removed, to my mind, obviously you would have to report it, and report it as a fraud by passing an MOC or reporting it to the central auditor. And in case you are able to get information with respect to the list of accounts which have been flagged as are red flagged by the other banks and not by me or the branch you are auditing, then obviously this would not be a condition where one needs to red flag it, because it may be an instance where I do not have those early warning signals. So this would probably come into my reporting under the LFAR. So, I would say that all material advances, I need to check the early warning signals. So, please do download that circular. I would subsequently refer to you and take those early warning signals annexure to, take a printout, because there are 42 of them, and then have a look at, saying whether there are any accounts where the number of early warning signals are many to justify classification, flagging that account as a red flagged account. Then this is the RBI Master Direction on Frauds of 2016, which is updated up to 2017. This is where you have annexure 2 with the 42 early warning signals. So obviously, like we said in the earlier slide, I think we need to review it, map the early warning signals. Obviously, I would not suggest that out of the 42, if you have every account would have a few early warning signals, but then that would not mean that they need to be flagged as an RFA. But in case there are accounts where the number of early warning signals are many, then probably you would need to escalate it, discuss it with the management and maybe the top management as to whether these need to be red flagged and reported in your LFAR also. For this, I think members may also refer to the early signals of fraud in the banking sector, which is the publication of the Institute 2018 edition. Then, friends, there is the Central Fraud Registry, which banks use for credit appraisal. Primarily, it tells you, whether that particular borrower or his directors have been named in any fraud across the banking industry. So, this is a portal where it is not available or open for the auditors to directly access. So, what you would have to do is, number one, obviously, ask the branch officials whether they are using the Central Fraud Registry for credit appraisal. And, for borrowers of, let's say, 1 CR and above, you can select the sample, ask the branch officials to log into that portal and ensure that these borrowers are not reported under the CFR by any other bank, because if they are, then you'll have to look at those particular borrowers' advances with a different viewpoint and a different angle. So do take screenshots of that and if possible document it, because that is the only document or proof you would have that you have verified the compliance with the CFR. And then I think all of you friends would be aware of the registration of the collaterals and the movable and the immovable properties on the CERSAI portal. Now here also again auditors would not have access, but then my advice is that in respect of a few standard advances and in respect of NPS, definitely all large advances where they have normally the principal security would not be available in NPS, because that is the first thing which gets depleted. But wherever there are collaterals etc., where we are taking the value based on the evaluation report etc., it would always be good practice if we with the help of the branch officials access the CERSAI portal, because the branch you are doing. So this is another check which is important, because in case it is not available on CERSAI, then it would obviously mean that it is probably not registered with us, or it is registered with some other bank, and which may result in an enhancement of the provision one is making for the NPA. And in case it is a standard account, obviously my disclosure as a unsecured would increase. Then with respect to borrowers with limits of 100 crores and above, last 2 years there is a new methodology which the RBI has come out with of legal entity identifier. This was there in March 19 and is also there in March 20. So for all those accounts of 100 crores and above, I think we need to ensure that borrowers are registered in the for the LEI, and in case they were also registered in March 19 and 1 year is expired, then we need to ensure that it has been renewed as of March 20. One very important report which is available in all the CBS reports is the exception report. And I feel that it takes care of all the controls which the CBS has built in. So it's very necessary that we not only, number one, keep a copy of the exception report as at the year end, verify what are the exceptions which the CBS software has identified, and ensure that none of it results in any MOC etc. having to be issued by you. Apart from this, as a check, I would advise you that you do take ask the branch officials to generate exception reports, at least one sample report, any odd date in each quarter, and find out what are the kind of irregularities which it has been reporting and whether it has any impact on the branch audit report you are signing off. Then there is one CRILC report all of you would be aware of. Then here also I would again suggest that with respect to all the stressed accounts you find out during your review, please do ask the branch officials to generate the CRILC report or give a copy to you as of the year end and also as on date, so that you can get a idea of what is the classification of that account which the branch has reported to the RBI. There is one, there's a loan delivery system which came out by the RBI Circular of 5th December 2018. This again relates to only fund-based working capital of 100 crores and above. So those of you who would be doing branches with any account of 150 crores and above, primarily, what the loan delivery system talks of is that the working capital has to be bifurcated into 60% loan and 40% cash credit. So effectively, let's say, I'm giving a loan of 100 crores, then the first 60 crores I disburse to the borrower has to go into the loan element. And once I cross the limit of 60 crores, I get into the CC limit, which is this thing. Of course, the security, etc., would be on the entire 100 crores or 150 crores. Friends, I think, because I do not think we would run short of time, but I'll quickly just tell you that, for reference, as branch auditors, what all of you need to do is that, go to the RBI's website and do not only take copies of the RBI Master Circular or the Master Directions, but most importantly, I think, what you need to look at is the FAQs. I think, there are two very important FAQs which explain, in fact, if you remember, even the 27th March 2020, which the moratorium on the term loans and the deferment of interest came out, there was an FAQ which explained matters more in detail. So similarly, there are one or two circulars which master circulars and master directions, which are followed up by FAQs, which explain things in detail for the help of all the readers. Now, the master circular, obviously, they've stopped after July 15, but with respect to the IRAC norms, the income recognition, asset classification, and provisioning norms, friends, there is no master direction which has come, because primarily what the RBI says is that, if I have taken out a master direction, all the master circulars go out. So master direction takes over. But in respect to the IRAC norms, there are no master directions issued. So the master circular on IRAC 1st July 2015 is still applicable. So for you to refer to the NPA classification provisioning norms, most of it on a general level, you would have to refer to the July 1, 2015 circular. So these are some important master circulars still valid. And I think, I would suggest that, you not only have a look at the IRAC norm circular, but also all other circulars which are equally important and available on the RBI website. Master directions on frauds is there. Then the interest rate, lending to MSME, they're all very important things. So that is the reason why I said that, it is very important that one give out of the total assignment time, I have at least 30 to 40% of the time for my planning and reading part. Now, these are two FAQs which I referred to are very important, and I think, I would suggest that all of you download this, and they are available on the RBI website. The FAQ on MSME, which is updated up to 20th March 2018, and the priority sector lending, which is again a very important aspect of any bank branch audit. This is again updated up to 20th December 2018. But, in case it has been updated during the past 15-20 days, I may not have updated it. But then I feel, as of date, these are the last two updates available. These are, the important circulars which came out, which all of you need to refer to. 7 June 2019 circular, which I talked of. The other circulars, I think, all of us have already discussed, and all of you are aware. Things you need to carry to the branch is obviously, other than, I would suggest that, all the important circulars, you could have a PDF in your laptop which you carry, but some circulars which probably, some old school thought people like me probably would like it to be in print, at least, some circulars, so that they can be referred to. So probably you can take copies of that. And then most importantly, for if you're doing a branch where you need your digital signature, then your digital signatures, and ensure that you have it yourself, because as of now, digital signatures are not secured by corresponding SMS coming to you like, any bank payment. So that's a big risk which one carries. Quickly, I think, this is a branch audit, a macro look one would take at, we sign the certificates, tax audit, LFR, profit loss, balance sheet, and the advances. So broadly, this is what you are signing. And if we first take up the balance sheet, if you see the, balance sheet, the liability side, the demand deposits, the time deposits, the borrowings, these are heads which, normally would not carry too much risk for you. The contra items would obviously be an important head for you. The other liabilities, like I said earlier, other liabilities and other assets are very important heads of account where, there are a number of accounts of importance which would be parked under that head, because time and demand deposits, they'll all be depositors where there's not too much audit procedure other than, probably checking the rate of interest. Then the interbranch, interbank, normally I think, because it is subject to reconciliation, one does report it in the audit report. So So to summarize, I would have two heads of account to look into the other liabilities and the contra items, assuming there are no borrowings, right? And on the asset side, I would have fixed assets, which obviously at a branch would not be too many, advances, which I would be taking up separately, which you would also be taking up separately, which are high risk areas. And then again, here also, you would have two important heads of account other than the advances and the fixed assets, which is the other assets and the contra items, the off balance sheet items. Cash and bank, normally, you do not have bank balances. You have a cash balance, which would go through your normal audit procedures. Now, like we discussed earlier, we once we have through with the lead sheet of major line items, I think majorly we would at least document all the our audit procedures there, and typically I think ratio analysis with comparison with the previous year would give you a year-on-year abnormal variance, which the resource who is doing it can go through and come out with the reason after discussing with the management as to for the abnormal variance. Let's take up the bank guarantees part. The bank guarantees, obviously, once you have the list of the bank guarantees and the LCs outstanding, as which are the off-balance sheet items in the both on the credit and the liability side, you would have, once you have the list of bank guarantees, the performance and the financial guarantee, one needs to ensure whether, there are guarantees which you need to knock off, and unnecessarily whether the bank branch is unnecessarily carrying the bank guarantees in the balance sheet, and maybe, adding on to the capital adequacy CRAR statement. So I need to ensure that I knock off the bank guarantees if it is beyond the claim period, and if it is within the claim period, obviously I can allow it to remain in the bank's balance sheet. So the BGs are to be knocked off only if the claim period has expired. You would probably have to look at the bank guarantee bond, and the notice, corresponding notice, if it is required, has been served. Similarly, the LCs, etc., like we said. Now, another important check in a bank guarantee is, identifying the bank guarantees as a performance and a financial bank guarantee. Because, friends, if you refer to the RBI Circular of 2nd April 2013, which is on capital adequacy, now there the RBI has listed out a table which clearly demarcates which are the kinds of guarantees which should be classified under the performance bank guarantee and which under financial bank guarantee. Now, friends, I think all of you would be aware that financial bank guarantees carry higher commission, and I have observed that in many cases that without actually looking into whether the nature of the bank guarantee, some over exuberant bank officials may classify a guarantee as financial bank guarantee primarily for the higher commission the branch gets. But the downside of this would be that the financial bank guarantees carry higher risk weight, so automatically it impacts the CRAR of the bank and the branch. This is the 2nd April 2013. So primarily the financial bank guarantee, it says it is a guarantee which assures the payment of money in the event of default, and the performance bank guarantee assures the adequate and timely performance of a contract. So this is the broad thing, but for your verification of the CRAR and the BG statement, I would suggest that you do take a copy of at least the annexure to the 2nd April 2013 circular, where the classification of performance and financial has been given. The other balance sheet checks would be that, I think all of you are aware that, in CCOD accounts, the interest is never debited on the last date, mostly, and a few banks are doing it on the last date. So what happens is, let's say I debit the CCOD with the interest across the bank on the 20th of March 2020. So the borrower's account gets debited on the 20th of March with interest up to 20th March. This year, of course, that would not be a case because the interest is deferred. But then this is a normal check. So for the balance 3 days, the interest is accrued and debited to an interest receivable or by any other name which the banks may call it, and club it under the other assets. So what one would need is, once I'm doing the lead sheet of the other assets, I would find probably a head, a substantial head which has interest receivable. Now this interest receivable, obviously, unless I have the borrower-wise detail, I would not be able to do a test check. So my advice is that please ensure that you get details of all major heads, either both under other assets and other liabilities, so that one can verify whether there is any, number one, test check those cases, and number two, probably cross check any error which the CBS has done, either at across the board, or maybe because of some somebody in the branch or the bank having tweaked certain parameters in the account. So correspondingly, like the interest receivable on the other asset side, you would also have the interest payable on the liability side for the deposits. So one needs to carry out similar checks on both the sides. But more importantly, I would need to take detailed statements of the interest receivable and interest payable. And if they are not available with the branch, kindly ask the branch to seek information from the respective zone or the region or the circle office for your verification and documentation. Friends, one important aspect is obviously in respect of the restructured accounts. Now, let's say an account is restructured and the unrecovered interest is funded as a FITL, the funded interest term loan. Now, whenever an FITL account is created, the corresponding income which is reversed from the income side is held under the other liabilities as a FITL account. Some banks have a system maybe of not holding it at the branch, but holding it at the head office level. But I think, a substantial number of banks, you would also find that, FITL, which is corresponding to the FITL under the advances side, are held in the branch. Now, wherever the FITL, you see an FITL under advances, please look for the corresponding FITL which would relate to the the income which has been reversed under the other liabilities. Now, typically, for an NPA or a restructured account, the FITL arm of both the advances and the liability side would match, because it is the exact amount of interest which I have reversed. But it would not match under a few conditions. It would not match when let's say an FITL has been recovered during the next year. When I created an FITL of 100 crores, I recovered 10 crores the next year, but I did not reverse the 10 crores from the I did not recognize 10 crores as income, because I need to recognize that 10 crores as income as soon as I recover the FITL by reversing the debit balance under the other liabilities. So under that circumstance, it would not match. So unless it is in respect of a standard account or the FITL is not held at the branch level, I would suggest that do this thumb rule, see whether the FITL arms under the other assets and the other liabilities match, and if they do not, look into the reason why, as to why they are not matching, and in case it is because of the recoveries which have happened in the FITL account and corresponding income not being recognized, then you would need to pass an MOC. So obviously, the all the heads, like I said, please ensure all heads under other assets and other liabilities, the individual line items, get complete details of that, make lead sheets wherever required, and ensure that the nomenclature of the account is corresponding to the actual nature, the classification, etc., and it does not require any provisioning or reversal, etc., under other assets and other liabilities. SA 505, I think we've already discussed. Now, P&L, if you see that there are very few heads which are there, and these are the major heads which you would see in a profit loss. The income side, you would only have interest earned, commission, and discount. For us, I think interest earned happens to be a very important check, because this is the interest paid, which is on the deposit side in most branches, would be on deposits where it does not change. Once I have made a deposit at X rate, it would remain at the same level. But on the advances side, because of the number of classifications and each borrower carrying a different risk, each borrower carrying a different rating, there would be a number of different interest rates which are applied on different borrowers. So, this is one major risk which we need to cover during our P&L. And the debit side or the expenditure side would be interest paid and sundries and charges. Here again, friends, I think I would advise you that you ask your audit resources to make lead sheet in respect of each line item. Obviously, carry out a ratio analysis year on year, abnormal variance with the previous year, so that you can get an idea as to what exactly is the variance normal, and if it is abnormal, you can find out whether it is on account of some provision not being made, etc. Normal audit procedures which you would be carrying out in the other audits also. I think generally nowadays most of the reversals of unearned interest on bills purchase, bills portfolio, in fact, and the interest accruals on the bills portfolio, they're all CBS driven. But then, as an auditor, I would always advise you that do carry out a test check and try and find out whether it is the CBS is carrying out the calculation of the unearned interest and interest accrual, etc. Now, we discussed earlier, the interest rate on advances, which obviously keeps changing. What are the kind of checks we can carry out? One, as an auditor, I need to ensure that the interest rates actually applied are as per the sanction letter, are as per the value date is correct, from the date of change, the parameters which have been entered into of a borrower. So typically I would suggest that whoever is doing the advances, when he is reviewing the sanction letter, he needs to ensure two things. Number one, see what is the rate of interest which the particular limit has been sanctioned at, whether it is 100 basis points plus the base rate or the MCLR, and if it is at that rate, then obviously in respect of CCOD accounts, it will depend on the rating of the particular borrower. So that particular audit resource would have to ensure, number one, the pinnacle, the parameter entered there is exactly as per the software, as per the sanction letter, and number two, whether the the rating, the interest rate is as per the rating in respect of CCOD accounts. So primarily, we need to ensure, it is not like in, and it can change because, over years, on review or renewal of a particular limit, the ROI could change. Also, if the rating of the particular borrower changes, the ROI could change. So since it is fluid, as an auditor, one would have to look into the interest applied on advances more carefully than the interest on advances. And the other special checks on the profit loss would be that one needs to ensure that the interest realized on NPAs are taken to income only when they are credits, not out of additional fresh or additional facilities. In LC's BG's invoked account, the Master Circular of 1st July 2015 clearly says that they wherever LCs are devolved or the BGs are invoked, please ensure that they are parked to the primary operating account. And once they are parked to the primary operating account, some branches, what they do is they, instead of parking it to the primary operating account, they would park it in separate accounts individually. So if there are 5 BGs which have been invoked, they would open 5 different BGs accounts and give 90 days delinquency norms to each account. So and maybe the CBS could in such cases use the maximum applicable rate of interest, whereas since the RBI clearly says that such accounts need to be parked in the primary operating account, the rate of interest which has to be charged in such account should be what has been sanctioned. And in case the parking of such devolvement or invocation results in the account being classified as NPA, then that would be a different ball game. And of the commission in respect of forward contracts, I think we can test check whether they've been reversed for the unexpired portion of the forward contract. We can make various checks, manually test check the bank guarantee LC commission, especially where they have been extended, where they've been cancelled prior to the period. We need to test check the income in such cases. There could be instances where the bank guarantee, is a long-term bank guarantee. The commission is substantial, and the commission, I think many banks, they are accounting for the bank guarantee LC commission on cash basis. In such cases, I do not get into the accrual and other aspects. But in case they are not accounting for on cash basis, then I need to ensure that the amortization, etc., which would be held under the other liabilities, is proper and as per the the period as such. The processing charges, obviously, I need to ensure that they are being charged not from the due date, but from the actual sanction or the renewal date. Processing charges, I can do a check whether it has been the manual flag is ticked or not. Another important check is that we need to ensure that the interest concession. Many cases you would have observed that borrowers who are doing very well, who are giving their returns in time, and they are good borrowers. Then in such cases, interest concessions, we need to ensure that they are applied at account level and not at the customer level. So this is one important thing, that because if I do it at the customer level, although I wanted to give a concession to a CCOD account, but if I do it at the customer level, all his accounts would get the benefit of the revised interest concession. Legal expenses, I think a review, most cases it can help you in finding out, based on the payment it has been making to the lawyers. Important cases on legal cases pending, I can find out, discuss with the branch management as to, what are the cases particular lawyers are handling, and maybe, also material contingent liabilities in the AS29 statement, which we would give. Now, these are quickly some broad special checks I can do on the interest rates. I can ensure that they are not set at 0. They have not been set, the periodicity has not been set other than monthly. When I'm sanctioning a particular loan, I have not set the interest application at a future date. I obviously, like I said earlier, I compare the parameter with the sanction letter. I ensure that the collection flag has not been set at no. I ensure that the pegged flag, I do not peg it, is marked as N in all cases where interest is linked to the thing, except where, of course, the interest is fixed. And most importantly, as a very important check by all the branch auditors, one report which all of us need to generate from the Finacle and document is the interest failure report. So, the interest failure report, we need to ask the branch management to generate and give it to us, and you can document and ensure that there are no accounts where there is an interest failure report, unless that report is also generates it for the uh, for the NP accounts. Quickly, just two or three this thing. I think the audit report, like we need to wait for the revised audit report in case IFC and the other four paras are to be introduced this year. But my advice would be, please do not try and print it on your own letterhead. All the audit reports, the various non-compliances with the accounting standards and any other provision which you are pointing out that this needs to be done at the head office, etc., that needs to be obviously reported. The standard qualifications would be 115, 17, 18, 22. I think all of them would, because accounting standard 1, most banks, they do not give a copy of the current year's significant accounting policies to the branch auditors, which obviously I think, to my mind, understanding the branch without the current year's significant accounting policies would not be correct. But then in case it is not there, as a branch auditor, I would suggest that, we qualify as 129. I think most of the banks, they're already, they do have a statement for that. And SA 701, I think we've already discussed that, we are no longer this. Then one food for thought, which I thought would leave you with is in the audit report we sign one para which is probably the second last para, where we say that the all the transactions which have come to the notice of the auditors have been within the powers of the manager. But then we need to look out for cases in such instances where, let's say, the bank guarantees, LCs, etc., or any other case. This is just an example. Now, let's say, the sanction from the head office said that you need to have a margin of 20%, but the branch at their own level have been opening bank guarantees at, let's say, 40 to 50%. Now, this obviously would be, since it is not within the powers of the branch manager, I think, in such cases or any other cases which you come out with, please ensure that, when we are giving a blanket certificate that all transactions which have come to the notice of the auditors have been within the powers of the manager, I think, we need to have some specific audit procedures before we actually sign off. LFR, I think, please ensure that, do not report anything which relates to the MOCs, etc., or potential NPAs in the LFR. A very old suggestion by, I think, probably all speakers, Ghosh and Jilali. Try and not, restrict yourself to yes, no, not applicable. There are many paras where, you cannot just reply by this yes, no, not applicable. So probably, in case it is a digital kind of format which you're signing, so you could give a separate report to the management and the central auditors stating your particular opinion. The asset liability management statement, in case your bank is asking you to sign, please ensure that you are able to verify and you have the details of all the borrower-wise buckets. Because ever since I have started auditing, I have never been able to lay hands on any detail with respect to bills, term loans, etc. So, right through my auditing experience, I've always had to qualify such. Of course, now many banks, they have started stating that, it is based on the compilation by the management. Annexure, just for the clarification, the large advances annexure is with respect to advances with outstanding balances of 2 crores and above. So I don't think that you need to append to your LFR small accounts with limits outstandings of less than that. And of course, annexure B and C are specific annexures which are given. Just 2 or 3 slides further before I am able to close. This, like I said, the capital adequacy or the CRAR statement, to my mind, is one statement which normally, is auditors have been checking it more with the objective of mapping it with the financial statements and probably test checking a few cases. But then, if you actually have a look at this, it has a huge bearing on the CRAR of the bank as a whole, and which obviously also has an impact, which is a regulatory compliance. Now, quickly, the CRAR, the capital adequacy, basically constitutes of the capital on one side and the risk. So capital is dealt with at the HO level, and also the risk, which is comprised of 3 parts: the credit, market, and operational. We as branch auditors would be required to comment only on the credit part, which is dealt at the branch level. So your CRAR statements at the branch level would only relate to the credit part. Now, what are the checks which we can do with respect to the CRAR checks? Now, obviously, the first check would be that whether the total advances as per the financial statements tally with the advances as per the risk-weighted RWA statement. Now, why I'm asking you to verify this is, although those 2 softwares are normally integrated, but then like the advances or the IRAC norms, similarly, even the CRAR in many banks, they are handled by surround softwares, not the main Finacle software. So so that is why this check becomes important, that I verify the totals of both these statements. Then second, the thing is, I need to verify whether the asset code has been correct asset code has been used in the RWA based sheet based on the nature of the account. Now, the there's the capital adequacy master circular. Now, there it gives you a classification as to based on the nature of account, what is the asset code one needs to use. So this is a list of only around 10 to 12 asset codes, and one would be able to easily do it based on the nature of the account. So this is one check you can do since you've already done the advances statement. So typically a person who's done the advances, the standard advances and the NP advances, he would be the best person to carry out checks on the CRAR statement. The third check would be whether the asset classification which has been used in the RWA is correct. Number 4, the risk-weighted assets, whether they've been assigned to the exposure according to the claim categories. Again, here there is an annexure 9 to the master circular. I'm not taking it too much in detail because I'm just referring to the master circular and the annexures, etc., where you need to do these checks to ensure that the CR, because one very common problem is one with respect to the undrawn amount which the branch normally would give, and second is the risk weight it would give based on the rating. These are 2 important parameters where you would find issues. See, in respect of the term loan, generally people have a belief that the undrawn amount would be that, let's say I have given a loan of 10 crores to a borrower. He's taken a loan of 2 crores. So the undrawn amount is 8 crores. Typically, yes, this would be the undrawn amount of 8 crores. But in case I have given a loan of 30 crores, which are to be drawn in 3 different tranches depending on the various completion stages of completion. Now, if in the first tranche I have drawn 5 crores out of the 10 crores, and the other 2 tranches of 10 crores each are yet to be touched upon. Now, typically, I would say that 25 crores is my undrawn amount, which will be incorrect, because my undrawn amount in this particular case would be the first tranche, because the second tranche would only happen after the first tranche. So here I would need to calculate it as 10 crores minus what I have drawn, 5 minus 5. So as against 25, I would have to take the undrawn amount as 5. In a CCOD account, typically, I think, generally it will be the sanction limit minus the balance outstanding, which will be the undrawn amount, unless, exceptionally, the unconditional cancelable clause, which is there in Pinnacle, has been wrongly marked as yes instead of no. It's normally there is no unconditional cancelable clause, hence it's always no. But in case it is marked as yes, then it would not be calculated as above. Second, the other check branch auditors can do is the guarantee collateral. I need to ensure it is properly linked in the Pinnacle, because that would be my security, and that would be the net amount on which I would calculate the risk weight. So I need to ensure that the guarantee amount and the collateral has been correctly entered in the even in the CRAR check. I mean, if it is there in the Pinnacle, typically it should be correctly stated even in the CRAR statement. But, this is a check one needs to make because of a possibility of the surround software not having captured it correctly, or, that statement this not having been entered correctly. Then the other checks one needs to make is whether the loan to value in respect of housing loans, you need to check it from the sanction letter, it has been correctly fed, whether the NPA flags are correct in the RWA sheet, because see, the NPA flag would come from the NPA statement, which is again a separate statement drawn from the Pinnacle. It is not the, you would have seen that ASCROM and by various names these surround software sheets are known. So similarly, that NPA flag has to be correctly mapped into the CRAR statement. Then whether the percentage of the NPA provision is correctly entered in the RWA sheet. Obviously, if I have an incorrect provision percentage, the risk weight would be incorrect. Incorrect risk weight automatically translates into incorrect capital adequacy. Then most importantly, like I said, other than the earlier slide where we discussed the undrawn amount, would be the rating. Now, we need to ensure that the accounts eligible for rating are rated. Now, currently, the standard advances where exposure is more than 25 crores, it has to be compulsorily externally rated. But of course, you need to check up with the internal bank guidelines. But here, what happens is that, if you are not able to find out what is the rating of the particular account, you can ask the bank to log into one of the rating agencies' websites, and then have a look at what is the actual rating and what is the rating which the bank is using in the CRAR for calculating the risk weight. These are cases typically for us as experience, there are two case parameters or two checks where normally, we do find a number of errors. One is incorrect rating being used and automatically incorrect risk weights being put, and number two, the undrawn amount being incorrectly calculated. Just two slides more. One, with respect to the FAQs of UDIN which are available, whether separate UDIN is to be generated for all certificates. ICS has clarified that, One, if you didn't do the job. For LFAR, again, it is clarified that, since it's one assignment, you use the same UDIN. And lastly, for tax audit, it says that, it has to be a separate UDIN which has to be generated. So I'll not, friends, thank you for having listened to me. And unfortunately, because of the paucity of time, I did want to take the agriculture term loans and also the natural calamities. But then, that would have taken me another, I think, uh, 25, 30 minutes. So maybe, we can, I can share with you some material which the Bangalore branch can forward to the members. Thank you again for a patient hearing.
Very thankful, sir, for your 110 minutes presentation continuously without any taking break. So a few members are also suggesting kindly give the break to the speaker for 5 minutes. So it's a very wonderful presentation, sir. You have touched the all the aspects of what is the subject line is today's covering on overview, planning, and documentation with specifications to accounting standard and SAS, and again what are the things to be taken care by extra take care by while checking the balance sheet and again P&L account items and FAQs. It was your book is also ready for us. Definitely, I request our members to go through the sir book. So definitely, we'll get an fruitful tips for the conducting branch edit. So, sir, on behalf of all the viewers and on behalf of managing committee members and on behalf of myself, I wholeheartedly thank you, sir. Thanks for your valuable time taking out and presenting for our members. And as you said, it was planned on 21st March. You are supposed to be in Bangalore, and hopefully, in coming days, your actual presence in the Bangalore is we are expecting for the Bangalore members for the one or the other forum. So, once again, sir, I wholeheartedly thank you very much for.
Do I need to take questions? I'm not sure if there are any questions which are
Yeah,
there in the.
you can send it because few of the question if you want, we can take it, sir.
I'll just see if there are any questions. If you just give me 1 minute, I'll just have a look. In case there are any questions, I'll.
Yes, sir.
Uh, there's one question which obviously is not related to me, but then it says that, please clarify whether additional provision is required to be made on all standard assets. That's just, I think, it's already there. Standard asset provisioning, it has, I think all banks have a separate statement. It will be on restructured accounts, etc. So I think, you can ask the speakers who's speaking on IREC norms to probably take this. And then I have one question which says whether additional provision required to be made. Okay, again, I think it's the same question, sir.
So one question is there in case if it is based on application by borrower, if the relaxation in NPA norms applicable to those accounts where borrower has not opted for moratorium period.
I think this is from SR Tejasvi. Again, Tejasvi, actually, I'm not touching upon the 27th March and 17th April circular. But, what you are asking is about probably the moratorium in respect of term loans, is it? If I'm right, will the relaxation and NPA norms be applicable where borrower has not opted for moratorium period? If he says that moratorium period is not opted, automatically the 17th April 2020 circular clearly clarifies that it is he will not get the NPA classification benefit. Uh, One okay, again, I think Tejasvi is asking same thing. Sir, one Mr. Radhakrishna Medreddy is asking, based on your program of audit and experience, ideally how much time we have to spend in the case of a branch with a 300 crore advances. See, Mr. Radhakrishna, I think the entire like I told you, when you actually accept an audit, the first thing you need to do is talk to the branch manager, find out the number of borrowers the particular branch has. Now, if the 300 crore advance has only 3 to 4 borrowers, the time taken would be less. But then I do not, even if you have a minimum number of advances, very small branch also would take at least 3 days, because if you have to go through the process of reviewing the entire operations of a branch, which is, I'm talking of 3 days only where, literally it's a very small branch with very small exposure. But a large branch can take you anything up to 10 to 12 days. A medium sized branch could take you 5 to 6 days. But then I think I would always suggest to all of you, please do not ever restrict your audit procedures or your this thing based on the time available, because none of the banks get signed off by the time the branch auditors sign off their this thing. And obviously, in case even if you are able to sign off within a period of 15 to 20 days from the time you allotted, if the three branches you get, it is justified, as long as the volume in that particular branch is of that level. I think, Ravinji, not too many questions, because I did not take up IRAC norms and others, but that's about all.
Okay, sir. Dear members, kindly note that tomorrow we are having sessions from CAS Ramesh from Chennai is going to session on IRAC norms and COVID-19 regulatory package of RBI. And day after tomorrow we are having sessions from CA Gautam Shah from Mumbai, audit of advances and NPA critical aspects. So today is the bank audit branch audit session started from the Anil Saxena sir. So hopefully members have enjoyed his presentation, and many members are asking this for the PPT. Definitely we are going to.
I'll send that, Ravinji. I'll send that.
Yes, they are going to upload this in the PPT. So members, please kindly give a big applause from wherever you are there to the Anil Saxena sir, all the way from Kanpur. And as I mentioned, it's in a distance learning and taking this in COVID challenges. So sir is timely helping and making us for this wonderful presentation. And my special thanks to the Anil Saxena sir for once again. And I thank all the viewers for your active participation in the Jnana Dasoha process of Bangalore branch, continuously going on. It has to be continuously our process for the chartered accountants. We all the chartered accountants, once again I am saying, be stronger and ready to face any challenges upcoming days. With this note, yes sir. Yes, sir, Anil, sir.
Just one this thing before I say goodbye. In case, since time was of limitation, and in case any member needs to talk to me or he wants to email to me, he can do it at any point of time, even when he's doing the branch audit. I'll be more than willing to help. So yes, you can share my telephone mobile number and the email ID. They can call me up or email anytime with any issue. If I'm able to resolve it, I'll definitely be very happy.
Yes, sir. Yes, sir. We are very grateful, sir, for listening from you. Because in the busy schedule, also you are giving your personal contacts to all our members. I request members to make use of the sir's expertise and fully completed the bank branch audit, and so show our strength as a chartered accountants, how we will be and partners in the nation building. So again, my special thanks to Anil Saxena sir and all the viewers for this wonderful session of Jnanadasava. Thank you, one and all. We'll be coming back at tomorrow. Thank you, sir. Thank you.
Thank you. Thank you.